All right, guys. Yeah, as Earl said, here, I'm gonna minimize this, get everything going. Yeah, guys, as Earl said, I'm a real estate agent in Houston, Texas. I learned a lot in my time at Texas Tech University, where I got my two degrees there, business management, business marketing. Um, and something pretty interesting about real estate for me, I actually got into real estate in a very devastating time in Houston. It was right after Hurricane Harvey, or actually during Hurricane Harvey. It was, I don't know if y'all know about it, but it was one of the most devastating hurricanes really in America. It was back in 2017, toward the end of 2017, and that's when I actually moved to Houston and got into real estate. So I really moved there at a very different time than normal. There was really, kind of a dark cloud around over the whole city because everyone was really kind of in a sense of despair and just kind of not the most optimistic time to move there. But yeah, that was that was when I got into real estate there, which was really a tough time for me because after something like that happens where there's just almost a whole full month of flooding for a lot of the city. There's not much real estate movement going on. People are stressed out. They're worried. They're dealing with their insurance companies. Insurance companies are really backed up. So it was not the ideal time to get into real estate. And I'm not from Houston either, so I didn't know many people moving there before I moved there. So I had a lot of things kind of stacked against me there when I first moved there in 2017, around out of college and everything. So yeah, I trade options professionally. I've been doing that for a while now. We have a mentoring program. We bring people in to learn how to trade options as well, to teach them step by step to do that. And then we run our fund too. And so a volatility investment fund, what that means is we trade strictly options on our fund to grow it and manage others' money. So it's a strictly options trading fund. So what that means there. All right. So I'm going to jump right into it here, guys. So, yeah, so stock market performance in 2021. It's been a very unconventional year for the stock market and real estate. I'm going to get into the real estate portion of it later on. But yeah, excluding today's close, the S&P 500 is up 19% so far this year, which is a crazy bull run already in itself. Because even on a good year, guys, the stock market is usually up around 7-10% after the whole year's over. And we're only a little bit past halfway through this year. So it's been a very, very unconventional year in the stock market. And it's going to be interesting to see how the rest of the year plays out, whether this bull run keeps going. We have a good pullback or good correction, or the market just kind of stagflates or stays where it's at. So we're going to see what happens here as the year plays out. So as I just kind of mentioned, we've been in a mostly strong bull market, and that's because we're kind of in reopening phase. So the stocks and sectors that have been significant are, kind of the airlines, the cruises, the restaurants. Chipotle has been killing it. I've been watching that stock closely for about the last month, just because it's had a crazy reopening run since things have been kind of normalized and getting back to full capacity and things like that. So stocks like that have been on a crazy run. But yeah, it's normally not like this. The first 6 months of the year, they do tend to be bullish overall, but not near as bullish or as strong as they are right now. So just so many different things going on in the market. It's a very interesting time to be invested or just be watching the stock market in general. So I'm getting into the catalyst here. So yeah, people are going back to work, allowing them to have more disposable income to spend as they please. And, a lot of people are investing in the stocks and the market, causing it to go up. And then something we have not seen in the past is there's been increased interest from younger investors, specifically millennials and Gen Z. So I'm sure y'all have heard of the craze of the meme stocks going on. I'm going to get into more in depth with what happened at the beginning of this year in a little bit. But yeah, so the meme stocks, if you haven't heard of this term, it's really social media driven, and someone will make a meme with a stock on it and then kind of a funny phrase. And to a lot of people, a lot of more traditional investors' amazement, it's a great marketing tactic right now to have the stock go up. Just simply making memes and having the memes go viral has made a lot of stocks go up. Specifically, GameStop, AMC, even BlackBerry for a little while there. So yeah, there's been a crazy number of just non-traditional things happening in the stock market this year, with the Reddit groups, the Wall Street Bets. If you haven't heard of those are online chat rooms where typically younger investors gather all in one chat room, and they try to pump a stock up, go to the moon, as they say, as they've been saying online. But yeah, it's just something the market has never seen this, and it's just driven such a strong interest from younger investors throughout this whole year. The more traditional investors, the hedge funds, the pension funds, they haven't watched this closely because it's having a huge impact on the market. It has so far had a big impact on the market that they're not used to having. They're used to being the big guys that kind of run everything. But now with this younger generation all kind of teaming up together, and also, they're getting the stimulus checks as well, which has had an impact too. They're kind of all putting that in one big pot or one stock and driving that stock up a lot. So it's really been a crazy time. We've never seen anything like this, at least never anything public or as public as it's been, where just a group of investors have gotten together and had such dramatic impact over the market as a whole, whether it's just a few stocks or one stock. It's really making the headlines this year. And the older, funds, mutual funds, hedge funds, they really struggled. They know how to deal with it. They were really kind of playing catch up the first this year, really January, February. They didn't know what was going on. They didn't know why this was happening or how it was happening. So it was very interesting to watch the first quarter of this year, how everything played out and how the more traditional bigger investors had to deal with what was going on. So yeah. And that's what I alluded to here, guys. And I'm very excited to talk to y'all about this because nothing like this has ever happened in the market before, especially to an extent as this happened. Everybody and their mom was talking about GameStop probably January through March of this year. It was crazy. If you haven't heard about it or know what really went on, so GameStop, it was somewhat of a reopening stock, but it was still closed down for the most part across the country at the beginning of this year. And so a whole lot of hedge funds, what they were doing is they were kind of ganging up on the GameStop stock and shorting the stock, which created a short squeeze, or they shorted more stocks than were available to short. So with that creates opportunity for other investors to come in, and if they bought up enough shares, that could cause the hedge funds to have to cover their shorts without losing a huge amount of money before they lost a large amount of money, and just have the stock shoot up. Basically, that's what happens because the stock was only about $40 per se, and the highest I believe it got was right about $500. And GameStop's numbers aren't great, so it going from $40 to $500 in a matter of, I think it was just like a week or two, is pretty unconventional and unheard of, especially when the fundamentals or the numbers of the company aren't anything impressive, because the company's been closed down for the most part for almost a whole year. So obviously its sales are going to be hurting, the numbers aren't going to be good, and everything like that. So, but to dive into it, what really happened was the whole group of investors on Wall Street Bets on Reddit.com was led by one guy who was hurt during the 2008 financial crisis. Him and his family were really devastated by that financial crisis, about 12 years ago. And he said his family lost so much money during that crisis, he had to sleep on the floor for years. I'm not sure what his real name is, but his username on the Reddit website is Roaring Kitty, I believe. So as you can tell, he's a real serious guy. But yeah, so he wanted to get back at the Wall Street guys and big banks that did that to his family, because those big banks that caused that mortgage crisis and the credit crisis of 2008 basically bankrupted his whole family, and he didn't have a bed to sleep on or a couch. He had to sleep on the floor for years, and that just really drove him to do something about it and kind of get back at the big guys. Sort of a David and Goliath story per se. So he got, I believe it was millions of investors together in this one chat room called Wall Street Bets, and they all ran up the GameStop stock. They just bought it and bought it and bought it to create that short squeeze against the hedge funds that caused the hedge funds to lose tons of money. There was one confirmed hedge fund that went out of business, Melvin Capital. There might have been more that went out of business, but that was the only one that was really talked about and written about online. So we know for sure that they put one hedge fund out of business. And so I guess his hard work paid off over the years. Warren Kitty's, his drive and just being really kind of scorned by the Wall Street and big banks. He kind of used that to motivate him and do something pretty big, because like I said, we've never seen something like this happen in the stock market before, where just a young group of investors got together and drove a stock up like crazy. So yeah. And after that happened, so GameStop had a big run up for about $40 to $500. Then it came down quickly. I had a lot of my friends call me. They usually aren't even interested in the stock market, but they were telling me, "Oh, dude, you got to buy GameStop. You got to buy GameStop." And I was like, "Guys, don't do it." Or if you did do it, sell it now, because eventually the guys at the top, the hedge funds, they're going to win. One way or another. They kind of run the show here. They're gonna win at some point in some way, and they did. The stock came all the way back down to $40. I think it was just a couple of weeks, maybe a week or two. And yeah, so a lot of people lost a lot of money. I told everybody that contacted me to get out of the stock. I believe Jim Cramer was saying the same thing. If you don't know who he is, he's one of the biggest kind of stock guys here in America. He has his own show on CNBC, and he talks about different stocks every day. But he was trying to tell the retail investors, no, if you're still in the stock, get out now. He's like, you've got your win, you've got your home run, get out of the stock now. And I was trying to reiterate that message to everyone I knew, because I had someone call me say, oh, the stock's going to go to $5,000. You better buy it now or you're going to regret it. I was like, man, it didn't get above $500. Why in the world would it go to $5,000? So it was one of the most interesting times that I've ever witnessed in the stock market as a whole. Is such an unconventional event, and just and on social media was going crazy about it. Like the stock market was really like a reality TV show for America and everybody that was invested in the stock market and GameStop specifically. So it was a very crazy time. And after that happened, that group called Wall Street Bets, that online chat room, they thought they had a recipe for success. So they tried to kind of replicate what they did before with GameStop to other stocks, and so far it hasn't happened. GameStop, it did go back up, so it came all the way back down to 40, and since then it's really been kind of ranging from about $80 to $200. I think it's like at 174, 175 right now. So it's not near what it was, but it's not that below where it was either. So yeah, I guess that's a win. if they're still in it, if there's a hole in the stock, I guess that's a win. But yeah, just a very crazy time, because we've never seen anything like that before in the stock market, or any market as a whole, where a group of younger investors got together and really took down the big hedge funds in Wall Street. So very, very interesting and crazy stuff there. Okay, now I'm going to go more into options here, guys. So options are financial contracts with an expiration date. They can be traded on equities or stocks, currencies, grains, indexes, futures, and ETFs. The two different types of options are calls and put options. And they're on this chart, it kind of gives the impression that calls are only for stocks you think are going up, and puts are only for stocks you think are going down. But that's not true, because they're somewhat reversible in a way. You can use calls options on stocks you think are going up, or you can use them on stocks you think are going down. It's the same with puts too. You can utilize puts for stocks you think are going to increase, or stocks that you think are going to decrease. So they're really kind of interchangeable in that way. And they are a lot more complex than just simply buying and holding stocks. But I'm going to go more in depth with that here. But the main point of this that I want you to know is that they're interchangeable, whether it's a call or a put and you think a stock is going to go up or down, or bullish or bearish. So go into it more here. So the advantage of trading options, I think there are tons of advantages of trading options. Like this is my passion. I love trading options. I do it every day. The market's up every Monday through Friday. I'm trading options because they just give you so much more leverage, in my opinion, than just simply buying and holding stocks. And you just have so much more control over the outcome of a trade. So when you buy a stock, you just simply have a 50% chance of making money in that stock, because it can go up or down from where you bought it at. But when you trade options on certain stocks, you can increase your chance of success to a much higher than 50% chance to make money with that stock. And there's so many different ways you can do it too. You can do spreads, you can do strangles, you can do straddles, you can do butterflies, iron condors. There are just all different kinds of things you can do with options. And once I learned all these different strategies and methods to use trading on stocks and make money, my mind was just blown. And I couldn't stop doing it. I've been trading for about 3 or 4 years now, and I've never stopped trading options since I've learned how to trade them. I never plan to stop either. So yeah, they give you so much leverage, and there's just so many different things you can do with options that you can't do when you simply buy and hold a stock. And options, they also give you access to margin as well. And what I mean by that is pretty much all brokers are the same in this regard. Whether it's TD Ameritrade, E-Trade, Charles Schwab, whoever, once you have a certain amount of capital in your account, they'll let you use their money to essentially make more money through your account without you having to add any more capital to that. So, just for instance, say you have $50 in your account, and if you have a margin account that allows you to trade options, your broker might double that by letting you use their money to have more capital in your account to put on more trades and essentially make more money. So you get special access to margin that you don't get with just a regular retail trading account that you buy and sell stocks on. So a great way to do that. And then, you can limit your losses too. So if you're simply just want to buy and hold stocks, you can hedge those with options. if you're holding the stock for a long time on that, then you can, you know, utilize certain put or call options on the losses you have if that stock just tanks. You know, I think I watched one stock today was Baidu. It was down a lot. It's been down a lot the last month or so. So yeah, just something I've been doing to limit my losses on that is utilize options to really hedge myself and protect my downside on that certain stock. So yeah. Then to go more in depth with this, so as I said, you can hedge any position or stock you own. You can use options to hedge your other options positions as well. So if you have an option position that you'll make money on, if the stock increases, you can protect your downside with that option as well, the different option positions. So they're kind of interchangeable in that way. You can make money no matter what the stock does. If the stock goes up, you can utilize certain strategies to make money. If it goes down, you can utilize strategies to make money. Or if a stock stayed in the same place for a long period of time, you know, you can utilize certain short volatility strategies to make money as well. So, and also if you already own the stock, it allows you to get an additional source of profit on that stock. One common way is the selling covered calls on stock. So what that means is you own the stock and you also sell some calls on that stock for additional income. So yeah, that's just one way to do it, but there's multiple ways you can generate additional income from options by already owning stocks as well. And then another thing you can do is you can trade higher price stocks for less capital. So two very large caps or higher price stocks are Amazon and Google. And I believe Amazon's, it's around 3,600 right now, and Google's around 2,700, and that's just for one share. So what that means is to own one share of Amazon, you have to pay, it's like $3,650 or $3,650 on one share of it. And to own one share of Google, you have to pay around $2,700, which is, you know, a good amount of capital. So imagine if you want to buy 100 shares of those stocks, you'd have to have a lot of capital to be able to do that. But with options, it's different. So you can benefit off stocks like that if you're very bullish on those. So if you believe those stocks are going to continue to go up or at least not go down to a certain point, you can use options to benefit off that and profit off that too. So there's certain things you can do. You can greatly reduce the amount of capital required to trade these two stocks or other stocks, but these are two great examples because there's two very bullish stocks lately. So you can benefit off a stock going up, even if it's a very expensive stock with options trading. That's a kind of one of the common ways to do it on a higher price stocks without outright buying the stock. It's trading options with certain strategies that make it cost very little amount of capital to make money off those stocks. So that's one way to do it there. And then yeah, so there's been a crypto craze lately. Really, the last probably year and a half here in America. It's been interesting. It's been almost as interesting as the Gamestop Saga I was talking about earlier. But yeah, and a lot of celebrities are kind of getting behind this too, or famous investors like, you know, Elon Musk, Mark Cuban, Jim Cramer talked about some as well. But the most popular cryptocurrencies here are Bitcoin, Ethereum, and Dogecoin. So I'm not sure if y'all heard about the Dogecoin craze here in America. So it really kind of replaced GameStop there for a while. It probably went on for about 2 or 3 months. And it was really kind of the same story, but the stock, I don't think it ever was on the stock. The cryptocurrency never even got to $1. So it started out, you know, it was like 10, 15 cents. And then I think because Elon Musk talked about it one time, then everybody went crazy and started buying the Dogecoin here in America. And it was the same thing. It was social media driven like crazy. It was lots of memes, lots of posts, you know, lots of videos made about Dogecoin. And it was just saying, buy, buy, buy. It's going to the moon. It was kind of the same thing with games. I buy a lot of my friends that typically aren't invested in the stock market or don't have anything to do with the market, you know, calling me, texting me, DMing me on social media saying, dude, you gotta buy Dogecoin. You gotta get to the stock. It's going up. It's going up. And the same thing with me. I was like, it's not gonna. It might go up some, but it's probably not gonna be a great long-term investment. I mean, it doesn't have any big money behind it. The hedge funds aren't really getting into it. The pension funds aren't really buying Dogecoin per se. So because cryptocurrency is still unregulated here in America, so it's kind of a little bit of a wild west. So the big money, the guys at the top aren't really, you know, sold on it. They're not getting behind it. And so that makes it a lot harder for the cryptocurrency to go up anymore. So yeah, it was a crazy time for about those 2 months. It was probably about April, May, June, you know, when everybody was just posting daily about Dogecoin, buy, it's going to the moon. I don't know if you've heard that phrase there, but here in America, it's pretty common when the younger investors think something's going to shoot up, they say, oh, it's going to the moon, you got to buy it. So So yeah, and just besides Dogecoin too, there's altcoin, there's lots of different coins in the cryptocurrency world right now. And since Dogecoin kind of died down a month or two ago, there really hasn't been anything come to replace it in terms of cryptocurrency. So the interest in kind of overall cryptocurrency has died down some. Bitcoin was down low 30,000 there for a couple of weeks. That hasn't happened for a while. But yeah, really that whole kind of the cryptocurrency Bitcoin space has died down a lot recently. And kind of the big turning point was when Elon Musk went on Saturday Night Live. That's a show, it's a comedy here in America. And he was supposed to go on the show and endorse Dogecoin and say, oh yeah, I own a lot of Dogecoin. It's going to go up, it's going to go to the moon. And he kind of did that, but I guess he didn't do it as much conviction as everybody thought he was going to do it. So after his appearance on the show, Saturday Night Live, Dogecoin kind of tanked, and a lot of people sold it, and since then it's never been the same. So yeah, it was kind of a GameStop do-over without GameStop. It was kind of Dogecoin, but it was a lot cheaper because it never even got to $1. So yeah, it's kind of like a crazy reality TV show series, watching these younger kind of investors try to drive things up and just to make quick money off that. When really it's not how investing and trading works. It's it's really a long-term thing you have to work on every day to get better and better at it. And it's just not something that you can make an easy, quick buck off of, like a lot of people have been trying to do this year. So yeah, just it is very funny to see the kind of the celebrity behind it. And it worked at first, but lately it's not been working as much so far. So interest in cryptocurrency overall, like Bitcoin, Ethereum, altcoin, Dogecoin has really died down quite a bit. So yeah, that's with the cryptocurrency current update there here in America. And then yeah, so here's the real estate market here in 2021. It's been a very, very unconventional year here in America in terms of real estate. Just like the stock market, the real estate has been very different as well. So for the most part, it's been a heavy seller's market, and it just hasn't, there's been a very low inventory. And toward the beginning of this year, we believe, that was because people were more fearful of COVID, and they didn't want a lot of people walk around their house, possibly spreading germs, not being careful, causing them to catch COVID and things like that. So it's been a very unconventional year for real estate. At the beginning of this year, there were very few homes for sale, really everywhere and across America. And what that did is it drove the prices up a lot, because the interest rates for mortgages were very, very low. They've been in the twos most of the year, even the low twos. I think they even dipped below the twos for a short amount of time there, because I had one client get a 1.8% interest rate, which is pretty unheard of. So yeah, it's been very one-sided to the sellers, because there's been a lot more pre-qualified buyers than there has sellers on the market, because the interest rates are so low that brings a lot more buyers into the market, making housing more affordable than it typically is when rates are in the 3 and 4s as opposed to low 2s. And so it has evened out in the last couple of months. It hasn't evened out dramatically. I would still say it's mostly a seller's market here in America. But also depends where you're at. The Houston market, you can't look at the New York market or the Los Angeles market or the Chicago market or things like that. So it really depends where you're at here in America, what state you're in, what area, because for the most part, real estate is not really national, it's more local. And just depending on what's going on in that market, then yeah, whether it's a seller's or buyer's market. So yeah, but home prices shot up dramatically in the first quarter of 2021. I think just January through March, there was about a 10 to 12% increase in home prices, mostly nationwide. And like I said, real estate trends aren't usually nationwide, but this one was, because just there were so few houses for sale. Buyers were desperate to buy a house, and they had to pay way over asking price to get the house. If they had a cash offer, they stood out. They would still probably have to go above asking price for the house with the cash offer. So it's been crazy times. I've seen on both ends. I had a lot of buyer clients trying to get houses. Some did, some didn't. They tended to have more success if they went for a new construction house than one that was already built and lived in. They tend to have more success doing that than trying to buy a resale. On the seller side, it's great, because you put a house up for sale and you've got 20 offers in 2 or 3 days. Your seller's happy, you're happy, and you pick the best offer and move on there. So yeah, it's been a very, very interesting, different year here we're seeing in real estate, as just like the stock market. So it's been pretty crazy these first 7 months here. Yeah, as I was saying, very low inventory with real estate, just seller hesitation. And yeah, those low interest rates are brought a lot more buyers to the market than it usually is. And then also something we've seen too is there are more investors from abroad. So investors from other countries. I think on the last house I sold that I listed, the buyer was from China, and he brought a house here in Houston or Richmond, right by Houston. So we've seen a lot of diversity in terms of the buyers here in America. A lot of them are coming from other countries, more than in the past than usual. So that's been going on, and just a lot of seller hesitation. People didn't want people inside their properties because they're worried about the germs and the disease and COVID and everything like that. So that's been going on a lot this year with everything. People be hesitant, and as more people have gotten vaccinated, we've seen more of an increase in them wanting to sell their house. And typically, this time of the year or the summertime is the hottest time of the year for real estate, or the most houses in the market. Most people want to buy houses because that's typically when their children are out of school during the summertime. Usually, from about May to August, most of their children aren't in school right now, so that's when they want to move before the new school year starts over. So that's typically about May to August. September is the hottest time of year for real estate. And it's been not really been like that this year. It's kind of slowed down the last couple of months. So it's just been very unconventional overall this whole year in terms of people buying houses, real estate, home prices, just all the above. It's not been conventional at all. It's been kind of flipped over. It's been way different. All right. So are they correlated? Are the real estate and stock market correlated? And if so, how are they correlated? So yes, and kind of no. So they definitely don't always mirror each other. A lot of the times one market will be going up and the other one won't be going up, or one will be going up and one will just kind of be standing there and not really do anything. So yeah. But when the stock market goes up, it can definitely increase consumer confidence like in real estate. Because here in America, you're able to use funds from your 401k to purchase a house. So what that means, if the stock market's increasing, that usually means your 401k is increasing as well, and you have more funds to buy a house with. And in turn, that can be good for real estate market too. And then real estate is also one of the 11 sectors of the stock market. So if that sector is doing well, it can boost consumer confidence and to buy other stocks, whether in the real estate sector or other sectors of the stock market too. So they are correlated, but they're not so directly correlated that if one goes up, the other one goes up, and if one goes down, the other one goes down. They can be pretty choppy per se, and it usually depends on the time of the year it is, depends what's going on, really worldwide, especially with the stock market. Whatever is going on in China or even Canada can affect the stock market too. So it's pretty interesting and crazy. If you watch both closely as I do every day, you'll see a lot of fluctuation. Like the stock market's been on a huge increase this year, and for the most part, the real estate market was too. So for the last 2 months, home sales have declined pretty substantially the last 2 months as the market sort of evened out. It's not such a heavy seller's market anymore as it was before. So so they're correlated, but they're not. They don't mirror each other, is what I would say. So with that. So as I was saying, each market is its own. One can go down, one can go up. And guys, the stock market tends to be a lot more volatile than the real estate market. So as I was saying, the stock market is almost up 20% just the beginning of this year, whereas the real estate market's up about 8 to 10% so far this year. So it's almost double the real estate market there. And really, on a good year, the real estate market, wherever you're at, goes up 5% for the whole year. And on average, the stock market goes up about 7 to 10% 1 year. So as you can see, there's quite a bit of a difference there in terms of how much one increases versus the other one increases. And the real estate markets, like I was saying, they vary by what area you're in. If you're in the city, if you're in the suburb, what state you're in, because the property taxes, they vary by state. Like states like Texas and Florida, they have no income tax. So with that being said, their property taxes can be higher as well. And there's just so many factors that go in there. HOAs or homeowners associations are more popular in some states than other states. And it's just so many different sectors and different animal. Really depends where you're at in the state, the city, and the country with the real estate there. And then so with the stock market, like I said, there are 11 different sectors of the stock market. So a lot of the time, about 5 to 8 sectors will be going up, and 3 sectors will be going down in the stock market, and vice versa. And it's a very mixed bag with the different sectors in the stock market. You have utilities, consumer cyclical, you got communication services, you got technology, just all the sectors there. You never know if they're going to be going up or down in the same day, the same month, the same year. So you got to remember, each market is its own. One can be doing great, one can be doing bad. They can both be pretty level, and it just varies a lot, day by day, month by month, and year by year. So, yeah, and when you buy real estate here in America, mostly overall in the world, it's a great a great hedge against inflation because as prices increase, or things increase here in America in terms of the price, the property value of your house tends to go up as well. Where if you own real estate, whether it's commercial, residential, the value of your property tends to go up as well as inflation. So it can be a great hedge to get against inflation. All right, guys. So that wraps up my presentation for today. Here is my email there if you want to reach out to me for any questions you have. I put a lot of information videos on my YouTube channel. You can just type in Dre Dinsmore for that. I put a lot of financial videos on there, a lot of videos about options, and a lot of videos about real estate too. Full disclosure, I'm not a financial advisor or anything like that, but I do put a lot of videos, educational videos in there for people to just watch if they want to. So you can check that out on my YouTube channel. And here are my social media tags as well. If you want to reach out to me on there, I'll do my best to get back to you as quick as I can. If y'all ever want to talk about finance or real estate or options trading, anything like that, yeah, just reach out to me there. But I enjoy talking to you so far, and I'm glad to take on any questions y'all got for me here.
All right, and thank you, Dre, again for speaking with us. I just remember when I first met you in Houston, you know, you were one of the sharpest guys I knew. You know, whether it was talking about business or just setting together like social events, you were always one of the sharpest. So no, thank you for taking the time just to speak with our Realtor Association. Yeah, so like Dre said, I like to open it up to some Q&As. I'll start it off. I have a couple questions for you, Dre. So what's a sector or a stock that we should look out for in your opinion, and why?
Yeah, so I look at so many stocks every day, man. It's kind of hard for me to give you just one. So I'll give you a few here. In terms of large caps or bigger companies, I like Google long term. They've been on a crazy run so far. I think just, man, about 2 or 3 months ago, the stock was about $1,700, and now it's gone up $1,000 just a few months, which is pretty crazy for any stock to go up $1,000 in a few months. So, and Google owns YouTube, and YouTube is very popular here in America. But especially for people 30, 35 and below, they're on YouTube pretty much every day, watching videos, watching educational videos to learn different things. I use YouTube for education purposes as well. So yeah, so Google is a great one in the long term. And then also Chipotle. Chipotle has seen a huge run in the last couple months as well. I think it's up to $300 just in the last 2 months or so. So Chipotle, and then some smaller caps or smaller companies are Airbnb. I like it on term as well. I think it's in growing popularity, and especially in America. And then Snapchat is doing really good too. Snapchat kind of has a hold on the younger generation, that Gen Z. They kind of dominate that generation because here in America, Gen Z isn't really worried about Facebook as much, so they kind of stay around Instagram and Snapchat. I have a little brother, he's younger, and if I text him, if I ever try to talk to him on Facebook, he doesn't answer that much. But if I ever Snapchat him or talk to him on Instagram, he always answers pretty quick. So it's pretty crazy how much time the younger generation spends on like platforms like Snapchat and Instagram. So those are my stocks that I would like.
Awesome. No, that's great. This one's a bit of a tougher question, but with all of the quantitative easing that was done during the pandemic, and for those who don't really know about quantitative easing, it essentially is just kind of pumping money into the system. And that's kind of what the Federal Reserve did to combat the pandemic. So are assets overly inflated, or are we looking at the next great bull run?
Yes and yes. So yeah, I mean, we've had a crazy bull run here. Even before the pandemic started, really, we were in a very strong bull run ever since about 2009, 2010. We've had a really strong bull run ever since then. And then once the pandemic hit, we saw a sharp decline in the market, but it was a very short-lived decline in the market. We had a very fast V-shaped recovery, and since then the market hasn't looked back. With that being said, I do think we're at pretty high levels here. It does seem inflated. But at the same time, earnings are coming out right now. We're kind of in the middle of earnings season as we speak here, and the earnings are great. The earnings for stocks so far have been really good. They've been very strong, and that typically means the stocks aren't going to stop. So I do think I don't think the bull run is going to stop immediately or in the very short term. I think it will go on for some time, but also I do think we will see a correction. Could be for the end of this year, could be first quarter next year. I do think we'll see a strong correction at some point because the stock market can't just go up, up, and up and up. And it's really not healthy for the stock market to go up so much so fast because when it does that, that's usually when it kind of crashes. It comes to the downside in a violent manner, and that stresses everybody out. Everyone sees their 401ks going down in value, others significantly rather quickly, and it just creates a lot of situations people don't really want. So yeah, I think the bull run isn't over yet, but I do think we're getting pretty inflated and pretty overbought at these levels.
Yeah, those are all great points there. I guess important thing is time in the market and not timing the market, right? I think that's what someone wise said. Okay, so I think we have a question in the group chat. So Liz Duena said, what website do we go in order to get guidance when just starting to invest? And that's actually kind of a question that I had as well.
Yeah. So I would say the most website I use the most, it's finviz.com. I'll spell it for you. That's finviz.com. And I really like finviz.com because it has a great combination of the fundamentals, which are the numbers of the actual company, like Amazon, for example. You can type in the Amazon stock ticker to finviz.com. It'll take you to a full spreadsheet of the company, and it'll tell you, the price to book ratio, the PE ratio, how much of the stock is owned by insiders, and really just everything. It'll tell you about the RSI, and also it give you a chart of the stock too. And on that chart, it'll have the 20, 50, and 200-day moving averages, which are technical indicators of the stock. So it's a great combination of technical and fundamental indicators that you can really use to evaluate a stock. And then on the bottom left, it is a recommendation for that stock as well. And it goes from 1 to 5, with the lower ranking being the better. So if you find a stock that's 1.9, 1.8, 1.7, then according to FinViz, it's a very strong stock. So that's what I use. If it's up towards a 5, if it's a 2, 3, or 4, that means it's a weaker stock, and you wouldn't want to buy it or hold it long term. So.
Awesome, thank you. So kind of piggybacking off of that, what kind of advice would you give to someone who wants to start trading options or just stocks in general?
Yeah, so the way I did it was I had to, find a mentor, and it wasn't free. I had to pay to learn it. And this was back around 2018, 2019. There was a hedge fund manager in Houston who I met through different connections, and he had an option mentoring program. And I joined this program, and I paid a monthly fee, and he taught me. And because there was about 3 or 4 years there, I tried to learn all on my own in terms of options trading. I read tons of books. I watched tons of YouTube videos. I did everything I could. I watched the CNBC, the main finance channel here in America. I did everything I could to learn options on my own, but it didn't work. It just didn't play out. And I watched a bunch of Tasty Trade videos too. Tasty Trade's a broker that specializes in options. They put out videos every day, and they live stream their office every day, just strict options trading. But I watched their videos, but really until I hired somebody to show me how to do it step by step, I didn't really make any progress. So find a mentor, and if you find a company that specializes in mentoring and options trading, and if you gotta pay, then obviously do it. You gotta invest in yourself to really get anywhere. So yeah, you gotta find somebody, because there's so many little small things, so many little nuts and bolts that go into options that unless you're doing it or you're watching someone doing it in front of you on step by step, it's just hard to understand it. So I would really say find a mentor, find someone that'll show you how to do it successfully.
Yeah, no, that's a great response there. I think it's always worth investing in yourself, right?
Oh, it is definitely, because the amount I invested in myself, I have the potential to make tenfold. So it's
Yep.
just crazy how just one little investment in yourself, for just a short amount of time, 6 months or a year, whatever that time is, and to learn a lifelong skill, how much you can pay off over the course of your lifetime.
Right, right. And would you like to share with us any kind of unique challenges or rewarding experiences that you had being both a realtor and an options trader?
Yeah, I mean, it can be difficult to balance both at the same time, especially if I've got a heavy load of real estate clients at that time. On average, I typically carry anywhere between 7 to 10 clients, which isn't that bad with real estate. But if I get more around 15 clients at one time, or just have a heavy workload of real estate clients, it can be difficult to manage both at one time. With options trading, how I trade, typically it's pretty low maintenance. I mean, I don't spend much time in front of the screen. I don't day trade or anything like that. So I'm not sitting in front of the screen all day with trading options. But there are days I just spend more time on than other days. So it really just depends, with managing what's going on in the market, with managing people. And when someone's buying a property to live in, or we call that residential real estate, it's a much more emotional process, like a commercial property they're buying. They're buying it just to invest in, you know. So with the real estate in general, you usually have to deal with a lot of people's emotions. I've got to deal with my clients' emotions. I've got to deal with the other agents on the other side of the transaction, their emotions, and they're just playing their clients' emotions. So I'm getting three different people's emotions kind of thrown at me all the time. So, and I'll just me, any agent. So yeah, they're definitely difficult times, balancing everything at once and balancing people's emotions. But at the same time, I'd say yeah, that makes it more rewarding when you do close on a house and get your client their dream house, or you help them sell a house they've been trying to sell for a long time, can get sold. Just last Wednesday, we finally closed my client's house. We've been trying to sell for over a year and a half. I think it was 19, 20 months it took us to sell in this house, but it was a very beaten down house, had a lot of issues with it, was very difficult to sell. We finally got it sold after 20 months. We finally closed on it, and now it's extremely rewarding because if we didn't sell that house, my client was going to have to foreclose on that house. And so, and he was a good friend of mine, so it meant a lot to me to get that house sold for him. So he didn't have to basically sacrifice his whole financial, his credit history, credit report, anything like that. He was going to take a big hit overall financially if he foreclosed on that house. So yeah, there definitely are rewarding moments. And when you make a great trade, that feels really good after your last few trades have gone bad. So definitely, yeah, definitely a lot of highs and lows. But at the end of the day, I love doing it.
Yeah. It's like there's no way real estate can't be a personal business because, it's a very personal aspect of life, right? So like even clients who were complete strangers before, like you kind of end up becoming really close, because of, all the things you have to go through during a transaction. So
Now you're basically going through like a whole journey because a
yeah.
typical transaction takes about a month. You'll spend a week or two kind of helping them if they're buying. You'll spend a week or two helping them find the house. So you're really spending anywhere from 1 to 2 months with them. So you kind of go through this like short mini journey with them, and there are definitely emotions along the way that you have to kind of handle and deal with on both sides of transactions. So yeah, when they close and they sign the paperwork and they walk away, the title company, they're typically in a very good mood, and I'm in a great mood. So yeah.
Right. Yeah, and before I get into my next question, just another reminder, we just have a few more minutes left for the Q&A. So if you have any questions, please you can feel free to type it into the chat. So you kind of mentioned you were trying to read books and things like that, but any books or shows that you're into these days?
Yeah, so I've read a lot of option trading books, and I honestly didn't get much from them. They they tend to be a little monotonous. I mean, they go into depth, but options are just they're pretty complex. So if you're not seeing like a real picture of it, or you're not seeing like a video, it's really hard to get something down from to get anything from that book. So I wouldn't say I really recommend a book or any books on it, but yeah, you can definitely look at my YouTube channel. And then also, like I mentioned earlier, you can go to tastytrade.com or tastyworks.com, and they're an American-based broker here where they specifically focus on options trading. And they live stream from their office every day during market hours, which over here is 8:30 a.m. to 3 p.m. And they talk about options all day long if that's what you want to learn. Options, or there's also CNBC. You can watch that. I'll just when you're watching videos online, be kind of careful because some people making videos they can be a little bit more motivated just to get views on their video than they can to give out good true content. So just kind of do your research and be a little careful when you're watching random YouTube videos or whatever. Just be cautious with that. But yeah, for options, I would say Tasty Trade and Tasty Works, the two best options there for options. And then yeah, the books written by Jim Cramer that focus specifically on stocks are really good. He just talks about the fundamentals in stocks, how to evaluate companies, how to spot a good company, and things like that. So yeah, definitely Jim Cramer's books just on stocks, and then Tasty Trade for options.